I just want to jump in. Okay, Michael, ultimately, it is Bitcoin is also dollar denominated. That's one thing. And if we see further currency debasement, how does that play out with Bitcoin? Should Bitcoin be priced in another currency? And just want to go on a little bit from that. And if we get further dollar debasement, is that one of the things which has been turbocharging Bitcoin itself now over the last 12 months?
Yeah, well, the way to think about Bitcoin is there's never going to be more than 21 million. So if you double the amount of dollars, it's got to be worth twice as much. And if you increase the number of dollars by a factor of 10, then you've got a lot more dollars chasing after the same exact Bitcoins. And everybody pretty much expects Bitcoin's going to have 21 million cap 150 years from now. You can't say that about commodities, credit, bonds, stocks, real estate. So in countries where the currency is collapsing faster, like Argentina, Bitcoin goes up even faster, right? If you have a very hard currency, Bitcoin goes up slower. It's basically just a way to acquire property in cyberspace in a different dimension than the current country. And the reason that it's the apex property is because if I bought ranches in California, I got California property tax. If I bought property in Switzerland, I'm subject to Swiss law, Swiss regulation. If I bought any other kind of stock, I'm subject to either the execution risk of the company or the competition of the company. So what is the risk in Bitcoin? Well, it's a monetary network. So the risk is another monetary network in cyberspace. And the thing that's so appealing to Bitcoin is it's the first $1 trillion digital monetary network. The next best one is 100 times smaller. So it's got network dominance. It rose to $1 trillion in 12 years. It's got massive momentum. And you can imagine the inertia of $1 trillion of money sitting on a network. Think about how hard people will fight to defend the $1 trillion they've deposited into this network. I say Bitcoin is a bank in cyberspace. And you can really think of it as the most successful bank in cyberspace. And it's arising to offer a very simple solution. It's a store of value solution at a time when everybody on Earth, all 7.8 billion people, need a store of value. Every investor with the $400 trillion worth of fiat derivatives needs a store of value. Every institution needs a store of value. And 100 million companies, private, and 10,000 public companies need a treasury strategy, which is a store of value. So it's simply a technical solution to a problem that became front and center, a big issue for everybody starting in March of 2020. So,
Michael, that brings me nicely to, so it's not going to be going back and dialing back. There's a lot to unpack here. It's not going to be a currency in your view. It's going to be merely a store of value. But is it a store of value which is being bought on a speculative basis? That's the thing.
Yeah, I think that in the early years, if you look at Bitcoin's development from 2010 to 2020, it was speculative. And by 2017 and 2018, in that first blow off top, when it went to 19,000 and it crashed, it was a lot of leverage speculators, and they were basically using Bitcoin to leverage to get to ICOs, to trade other crypto assets. And there was a small minority of hodlers that believed it was a store of value, but there was a majority of speculators that were leveraged, and they controlled the asset class. What happened in March of 2020 is that this became digital gold to anybody who's a macro investor who's concerned with the great monetary inflation, as Paul Tudor Jones called it. And when Paul Tudor Jones anointed it as the next digital gold, and Stanley Druckenmiller grabbed it, and Skybridge and Guggenheim, and everybody else started thinking about it, the narrative transitioned to store of value. The institutional investors, they came in with deep pockets. Their duration stretched out, the leverage decreased, and you had companies like mine that are saying, I just want to hold it forever, for 100 years. And the other thing that happened is, when Bitcoin is a monetary fire burning in cyberspace, how do you feed a fire, a monetary fire? You feed it money. And so When this fire burned into the public market, when it hit MicroStrategy, what happens? Well, a guy like me goes, okay, I think I'll buy about 175 million of it. And then I think my company will buy 250 million of it. We'll buy another 250 million. We'll just borrow 650 million at 75 basis points and borrow some more. We'll borrow $1 billion at 0% interest and borrow some more. So when the fire was burning through individual speculators, it was growing at 200% a year for a decade. When it hit the public markets after March, it started growing at 400% a year. It accelerated. It's like that fire goes through the warehouse and it hits the tanks of gasoline, and we pour gasoline on the fire. So that's what's happening right now. It's rotating, and if I'm a public company, I don't ever have to sell it. In fact, like MicroStrategy doesn't sell, I can borrow money or issue equity forever. Now, all the Bitcoin miners have come public. Riot, Marathon, Hut 8. There's another SPAC, Cypher's coming public. So imagine what happens if a Bitcoin miner is private. They mine Bitcoin and they sell it. When the Bitcoin miner becomes public, they raise equity and then they buy it. And so the stock to flow goes to infinity, and then it goes negative because now all the miners are slurping the Bitcoin out of the system. Because why would you sell something yielding 200% interest and invest in something with minus 15% interest? So capital.
Michael, I just want to get a sense. Okay, it is the fire burning. Then naturally, my question is going to be, what's going to be the water that goes on it? Would it be the removal of anonymity? Of course, there's a lot of guff said about that because it can be tracked who owns it, etc., through the blockchain ledger. And also, what about cloning here? That's another bit of water that could be put onto this. What about scalability? You're going to do 7 times a second transactions with it, that sort of thing. Are these all obstacles in the path of Bitcoin?
Okay, well, when you think about it as digital gold, you say, well, it looks perfect. So what's the problem with the story? Because it's just too perfect. And to your point, right, a rational person says, will it be banned? Will it be copied? Will it be hacked? And so the only way you know it's not going to be hacked is you watch it for 12 years. That's why it's a much safer idea when it's $1 trillion and 12 years old and it hasn't been hacked, and the network has got tens of billions of dollars invested in it to secure it. So no one's ever hacked Bitcoin. So that was the one big concern. The second is, will it be banned? Well, you couldn't know in 2013 when the IRS made it property in 2014, and when the SEC called it property, and when the OCC said that banks can custody it. All of a sudden you got comfortable. It's not a currency, but it is a property. The tax treatment says I need to buy it and hold it for a decade. If it was currency, I could buy it for a week and I could transfer it a month later with no tax. That's obviously not going to happen. So what you've got is currency bifurcating into medium of exchange, that's dollars and euros and yen, store of value, that's Bitcoin, gold, or stocks. So that was the second issue. It got normalized as property. And the third issue, well, what's the pushback on it, the concern? Is it scalable enough? I think my point with that is that if you've got it as if you're trying to use it to buy a cup of coffee and replace the dollar, no, it's not scalable enough, but that's not going to happen because the tax treatment is hostile to it. But if what you want to do is buy $1 billion of it and hold it for a decade, you only need one transaction a decade or maybe 10. And so you should think of it as a first level settlement network for huge blocks of digital gold. And the way that it grows from here is other companies plug into it, like Square and PayPal. They plug into it and their payment networks. And then MasterCard and Visa plug into it. And then JP Morgan and Morgan Stanley and Citigroup, they will plug into it. And you will have the Fidelities, the insurance companies, the fund companies, the banks, and the mobile app companies. They'll provide the scalability, and it will be legitimized as a store of value. And that's how people will get over all their concerns about either scalability or regulation.
So, Mike, ultimately then, what you're suggesting, as many have, that a country like, let's say, China, which has its population has the biggest number of Bitcoin, they couldn't shut it down even if they tried.
Yeah, I think that I think that if you,
I mean, India's trying to do something along those lines at the moment. They're considering this.
there's about 120 million to 140 million people with Bitcoin right now. And I would say it's past the event horizon. We'll have 1 billion people having Bitcoin within 5 years. We'll have 200 million or more by the end of this year. It's going that fast. I think they're adding like 6 million a month or something like that, maybe 8 million a month. So you can't stop it, because anybody with a mobile phone anywhere in the world with a VPN could go and get it, and you could move it peer to peer. So you can make it a bit more challenging. And in India and in China, they'll make it more challenging to buy it and scale. But it's in India and in China, for example, you can't actually access Google or Facebook, but that doesn't make those stocks bad investments. Ultimately, Western Europe and the United States is where the 80% of the money is, or 90% of the money. And between that and moving through major finance centers, et cetera, Singapore and the like, I think you're going to see that the monetary energy from those is more than enough to drive it through the market cap of gold, which would make it 10x bigger. And it should go to between 10 trillion and 100 trillion. And at that point, who knows what happens? I can't be sure.
Michael,
everybody needs that.
We've only got 2 or 3 minutes left, so just very, very briefly, just
Sure.
answering these questions. You think it's going to be $100 trillion market?
I do. I think it's a no-brainer. It flips gold, because that's 10 trillion, and so it's 1 trillion now. So it'll run there pretty fast. And then I think it'll kind of start to grow progressively, not at 200% a year, but 100%, and then 50%, and then 30%, and then 20%. And ultimately, the elephant in the room here is there's $100 trillion of treasury assets that are like negative yielding debt or low yielding debt. That $100 trillion of assets and indexes, that all has a negative real yield. And so it doesn't work for insurance companies and for long-term investors and for corporations. They're going to need to find something that's got long duration with a positive yield in every monetary environment. And Bitcoin is the perfect engineered treasury asset. If you were coming out of central casting saying, design me an asset that an insurance company can hold to fund insurance policies for 30 years. Or design me an asset for Apple Computer to hold instead of cash. I mean, Bitcoin is the ideal asset.